Have you ever felt out of balance in your trading? One day you're overanalyzing every chart, thinking so much that the opportunity slips away. The next day you're firing trades on gut feel, chasing every flicker of movement, and sometimes you just freeze, stuck between hesitation and doubt. Dr. Ari Kiev saw this pattern over and over. He worked with Olympic athletes and top hedge fund managers, and what he found was simple. Most performers, whether in sports or markets, fail not because they lack talent, but because they can't balance their strengths. Kiev called this the trader's trifecta: intellect, instinct, and guts. Analysis, intuition, decisive action. Three pieces that must work together. Let's break that down. Intellect is your brain's analysis, your chart work, your statistics, your economic research. It's the logic that frames opportunity and risk. Instinct is your intuition, the fast pattern recognition built from thousands of hours of screen time. It's that quiet nudge, that subtle awareness. I've seen this before. And guts? That's the courage to act when intellect and instinct align, even when emotions scream otherwise. Think of it like a three-legged stool. If intellect is missing, you gamble. If instinct is missing, you overthink. If guts are missing, you freeze. But when intellect, instinct, and guts balance, you get clarity, conviction, and execution. That's the trifecta. And it's the foundation Kiev coached into world-class traders. Now, balance doesn't just happen. It requires a plan. Kiev insisted on clear written goals. Why? Because goals are an anchor. When markets whip back and forth, your goals stop you from drifting. Imagine two traders. One wakes up with a vague goal: make money today. The other wakes up with a clear plan: I will take 2 A setups, risk no more than 0.5% each, and finish journaling by 4 p.m. Which trader is calmer during volatility? Which trader avoids revenge trades? It's the second one, the one with the plan. Planning reduces indecision. It turns chaos into structure. It breaks the marathon of trading mastery into steps you can actually follow. A monthly P&L target is nice, but a daily goal you can execute is powerful. So Kiev's first principle is this: plan and set goals that are clear, measurable, and break down into daily actions. But planning is only one part. The second is risk. Kiev coached traders to channel their competitiveness into discipline, not impulse. Think about it. If you're a competitor, your instinct is to win every point, every trade. But in trading, that fire can burn you alive. Risk management is where discipline meets competitiveness. Position sizing, stop losses, diversification. These aren't just technical tools, they're emotional guardrails. You don't place a stop because you doubt your setup. You place a stop because you respect the game. Kiev's message was simple. Be competitive about executing your rules, not chasing the market. The market isn't your opponent, your own impulses are. Then there's ingenuity, what Kiev called variant perception. This is the ability to think independently. When everyone is leaning one way, you ask, what if they're wrong? Where's the blind spot? What's being missed? Some of the greatest hedge fund trades in history came from variant perception, seeing opportunity in the cracks of consensus. But here's the catch. You can't just be different for the sake of being different. Variant perception comes from deep study and the courage to trust your research, even when the crowd disagrees. It's about cultivating an independent mind, so you're not dragged by headlines, Twitter feeds, or the noise of chat rooms. Independent thinking creates opportunity. Following consensus creates mediocrity. Finally, emotional mastery. Kiev knew that intellect, instinct, and guts collapse without emotional balance. He taught traders to recognize their feelings and manage them actively. Breathing exercises to reset the body, journaling to capture thoughts and identify patterns, collaboration with mentors and peers to challenge blind spots. Because no trader operates in isolation. Even the best performers draw strength from community. Olympic athletes have coaches, teams, and training partners. Why would trading, a performance field, under extreme pressure be any different? Emotional mastery isn't suppression. It's awareness. It's saying, I feel fear right now. That tells me risk feels bigger than usual. Do I need to reduce size? Or, I feel excitement. That tells me I may be biased towards reward. Do I need to slow down? That's emotional mastery. You don't fight feelings, you translate them into information. So let's tie this together. The trader's trifecta is balance, analysis, intuition, action, each reinforced by a plan, by risk discipline, by independent thought, and by emotional awareness. This is how Dr. Ari Kiev built Olympic-level traders. And it's how you can build your own identity as a professional. Here's your challenge. For the next week, score yourself on the trifecta every day. Ask, how did I use intellect? Did I do my prep? Did I trust my analysis? How did I use instinct? Did I listen to my intuition, or did I ignore it? How did I use guts? Did I act when my plan and instinct aligned, or did I freeze? Write one strength and one adjustment for each. Do this for 7 sessions. At the end of the week, you'll have a personal roadmap. You'll see where you're balanced and where you lean too heavily. That's how you build the trifecta into your trading. So remember Kiev's lesson. Don't just be smart. Don't just be intuitive. Don't just be brave. Be all three in balance. Plan with clarity. Manage risk with discipline. Think independently. Master your emotions. That is the trader's trifecta. That is how you trade to win.